Hello and welcome to Telegraph Studios and Business Reporter's Future of Finance and Banking campaign, hosted by the Telegraph Online. I'm Alistair Greener. Today I'm talking to Mark Shead and Leslie-Bini from BearingPoint. Good morning.
Good morning.
Now, we've noticed of late that this necessity for reporting, and it's increasing more and more and more. Why is this happening?
Indeed, there's no getting away from the fact that the regulatory burden that financial institutions are having to cope with, it's what we call regulatory inflation, and it's non-stop. So there are a number of reasons for that. The primary one that we tend to look at is the reaction to the global financial crisis. So an effort of regulators the world over to try and ensure that an imbroglio of such epic proportions just never happens again. So what that means is that in the kind of interconnected world that we have, where global banks are present in numerous jurisdictions, they have to cope with regulations coming out of the Basel Committee. They're going to have to cope with regulations that are harmonised in Europe, and also then on the national level, a certain level of gold plating by national regulators who want to ensure that their specific jurisdictions are protected. So we're seeing that, and we're also seeing that from a business perspective. Well, these organizations are also becoming more data-centric in how they're looking at data, their production of it, their use of it, their management of it, to actually reintegrate it into their businesses.
Absolutely, and I think also a good point to remember is that regulation evolves. Fit for purpose is not an end state necessarily, it's a continual journey of reassessment within regulation. And we've seen this within major regulations now, in that they can't necessarily release everything all up front. So there are gradual implementations to regulations, there are new iterations that come through, and all of these things compound on businesses today.
It's interesting, isn't it? Because there's always been data reporting. In the old days it was on paper, it was snail mail. And of course, we're now in this digital age. So why are organisations struggling to meet that new challenge?
I think absolutely you're right. Everything has historically always been done on paper, and naturally you would expect technology to improve that situation. But it really depends on how you're approaching the technology. If you look back to firms that are currently investing in systems, typically that investment goes into the front office systems or into middle office systems with little consideration for future regulatory needs, and indeed little visibility of future regulatory needs. And ultimately, when you do that, then you're creating yourself a bigger problem and actually adding to the technical debt that you have in the in-state.
Absolutely, but in defence maybe of the firms is that regulatory reporting is not the only thing they have to take care of. And let's be honest, if they could not do it, they would probably not do it. So if you put yourself in the shoes of a chief risk officer, a chief financial officer that has the ultimate burden of responsibility on making sure that this is done correctly, well, they've got budgets and they've got resources, and they have to take care of also running a business. So it's a very fine line that they're walking on. Society gives them a license to operate, and they have to operate within the confines of the rules that are defined. However, the only reason they have to do regulatory reporting is because they're viable going concerns, which means keeping their businesses going. So it's finding the balance between being compliant and also being profitable and desirable in the eyes of customers.
And ultimately, I think you have to look at the opportunity of technology again. And I think if you were to take, for example, some transactional reporting, and these are hugely detailed reports that have to be submitted every day. Now, if you were to try and do that on paper, it would probably take you all day just to print the report and deliver it. So it's completely not feasible, and technology is the only solution to be able to meet those demands. And when you accept that, then really you have to concede that technology is an opportunity and not necessarily a burden if approached in the right way.
Well, let's talk more about that, because you talked about burdens, you talked about opportunities. Which actually is it?
Very good question.
Yeah, I could say it could be a burden, it could be an opportunity.
Absolutely. Well, I think it depends on, again, how you approach it. So if we take the example of a topic that's been talked about a lot in the UK at the moment, which is the topic of challenger banks, well, they're very interesting for a number of reasons, not just because of their use of technology or their business models, but they have one major advantage in terms of lack of legacy architecture and no technical debt. So what that means is that they can almost leverage the pain and suffering that the traditional industry has gone through in putting in place regulations, leverage it to their advantage and say, well, we know what didn't work in the past, we're not going to make that mistake. So from the get-go, they can put in place systems and processes that are fit for purpose. Now, that doesn't mean they're going to remain fit for purpose forever, but it's certainly a good starting point. On the flip side, however, because they're smaller organizations, they may not have the expertise, the large policy teams, or even the budgets necessary to really go into the regulation and understand it. And there's always a risk there. So in terms of how regulation is disseminated, communicated, and how firms actually then take on themselves the burden of embedding it in their own organizations, well, challenger banks have both things to their advantage, but they also have, well, challenges.
Absolutely. And I think when looking at this, you have to look at the whole topic a little bit more holistically. As Anne said, you could look at the technical side of it, or you could look at the reporting or the regulation, but ultimately it's about a holistic approach. And if you look at what banks are doing today in terms of implementing regulations, often they're doing this on a case-by-case basis. Each new regulation comes along, they stand up a project, they try and implement that, they make some changes to systems. But what they're missing there is the bigger picture and actually an opportunity to take a step back and to take a more holistic approach. Each of these projects that they're running carries the same amount of overhead, tries to do the same thing. They're trying to understand the regulation, implement it into the business, collect data, process it and send it to the regulator. So if we accept that everybody is doing the same thing, regulation is non-competitive, it's non-discretionary, you have to do it, then, well, actually, there's some huge synergies that could operate both within a bank, but equally across the industry itself, because every bank is repeating exactly the same process. So maybe it's time for the industry to actually take a step back and say, is there a better way to do this in a much more holistic way? How can we leverage each other when implementing these regulations?
Indeed. I mean, from an operational perspective, we've heard stories, for example, of operational budgets being consumed up to 70% by regulatory and compliance issues, when in actual fact, from a business perspective, the banks would probably like to be focusing on digital transformation, for example. So it's almost a business imperative now to think about this differently, and we're definitely seeing an appetite in the industry to approach it in a different way, and maybe to give a kick into the hornet's nest and say, well, the rules that we thought were the rules of the game, perhaps we can change them.
Well, one thing we can't get away from is the fact that reporting has to take place. So tell us a bit more about BearingPoint. Where do you fit into this whole process?
Well, BearingPoint is typically known for its management consulting business, but one of the things that is maybe lesser known, and something we're very proud of, is the background that we have in regulatory reporting, which is over 20 years old. So we have a team that we've managed to bring together, which has experience in supervisory authorities, in central banks, insurance companies, and we really make sure that we have people who've experienced it from an implementation perspective, and that we get all those viewpoints, because we do believe very strongly that there's no single way, and part of the problem up until now is that it's been looked at from a very fixed standpoint. So we want to change the lens, widen how we're looking at the problem, and make sure that all those constituencies, the issues they have, they're all discussed and openly, to make sure that there is a solution found that works for everybody.
Yeah, and I think just on the back of Anne's comments, that team and the battle scars that they've encountered through all the regulations that we've implemented really comes into the ethos of our product with Abacus. And certainly Abacus 360, which is our new flagship product, takes a lot of those problems that we've seen within the industry and tries to address them. So for example, tackling regulation more holistically. So we have a single multi-jurisdictional data model so that you can see all of your regulatory reporting in one view. Full audit trail, for example, enables you to drill down and understand where there may have been manual processes or how that data lineage has been determined from the regulation to your systems. So some of these things have really been built into our core product. And ultimately as well within BearingPoint, we're looking to change the status quo slightly. So it's okay that we take a more holistic approach, or that we have a great product, but actually, as Anne mentioned earlier on, maybe it's time to really change things up completely. And this is something that we've seen over in Austria very recently with the formation of OREP. OREP was formed by the 7 largest banks within Austria as a joint venture. And ultimately what they wanted to do was to create a service company that they could effectively outsource all of their reporting to and become a single voice of the industry. So there are some huge synergies that can exist within the industry themselves when they actually come together and say, let's tackle this slightly differently. And with OREP, we think that really forms the blueprint for other countries to follow. And indeed, we're in conversations in a number of countries around other similar utility approaches. The UK being one itself. UK REP was an idea that we were put forward at the FCA's recent tech sprint, an event that was put together to garner innovation within the industry, and actually ended up winning the Jump Award from the cross-industry panel of judges. So not only was it deemed a success by the panels, but it's also been deemed a success by the banks, as we're in a number of conversations now about how to make UK rep a reality.
And as you say, reporting is becoming increasingly important to get it right. So it's interesting to find out the nuances of that and how to get it right and the tools that are actually available. Mark Shead and Leslie-Bini from BearingPoint, thank you very much indeed.
Thank you.
Thank you.